Kia ora. We'll be starting in a couple of minutes, so welcome to this seminar. Kia ora koutou, ngā mihi nui kia koutou, ko Barry Kotaho, ko rangatira ki te Putea Whai Whakaro. I'm CEO of Mindful Money. Nā mai haere mai ki tēnei hui mariko. So welcome to this online seminar. Mindful Money is a charity that is aiming to make investment a force for good. For those of you who don't know us, we'll put a little intro in the Zoom chat and in Facebook comments. Please go and check out our website to find out where your money is invested and find a more ethical fund. So there's a broader context than just ethical investing. Around the world, governments are realizing that it's not possible to make real progress on climate change, on the SDGs, and on tackling inequality unless we also tackle the broken finance system. As the saying goes, money makes the world go round, and none of the things that we really want to happen in terms of transformative change are going to happen until we start redesigning our finance system to support sustainability. So over the past 22 months, there's been a process of research, meetings, consultations, drafting, and at last a roadmap was launched by a group called the Sustainable Finance Forum, launched yesterday. So tonight, we've assembled a great panel of people who have all played key roles in this process, and we're going to try and unpack and make sense out of this huge agenda, although we've only got a limited amount of time to do so. So there's going to be plenty more still to explore when you get a chance to read the report. So we're particularly going to look at, what are the big directions on this journey, on this roadmap, what are the highlights, where are the EV charging stations, etc. We could use the roadmap analogy, but we won't. And what's next after? And tonight, we're going to be talking with our three panelists. Ivan Diaz-Rainey. Ivan's Associate Professor of Finance at University of Otago. He's Director of the Climate, Energy and Finance Group and Associate Editor of the Journal of Financial Regulation and Compliance. So welcome, Ivan.
Welcome. Thank you.
O'Connor is Head of Responsible Investment at the New Zealand Super Fund. She's current board member of the Responsible Investment Association of Australasia, otherwise known as RIA, and she's a commissioner on the Financial Sector Commission on Modern Slavery and Human Trafficking, the so-called Liechtenstein Initiative. And we are going to be talking about modern slavery at next week's seminar. So very warm welcome to you, Anne-Marie. And finally, we have Justine Seften. Justine is Associate Director and Head of Sustainable Finance at KPMG. She's a member of the National Advisory Board of Impact New Zealand, Impact Investment New Zealand, and Justine was one of the authors of the interim report. So it's a great panel, and I'm really excited by this. So before we start, we're going to be authoritarian and we're going to mute you, but please use the Zoom chat for writing questions, and don't have to wait until question time. You can write them in at any time. And if you're on Facebook Live, then put any questions or comments into the comments section of Facebook Live, and we'll pick them up, and my colleagues will bring them to us here on the Zoom call. So without further ado, and after that lengthy introduction, let's get going. So I've asked each of the panelists to look at a few recommendations that they think are particularly significant about this agenda. And as we said, there are a lot of recommendations. So please, will you kick us off? Maybe Anne-Marie, if you wouldn't mind.
Okay, well, Tēnā koutou. Thank you for having me here, Barry. Yes, it was very exciting to finally see the final report launched of the Sustainable Finance Forum. There was a lot of mahi there, and I think that's one of my real central themes on this journey around sustainable finance, is it's coming together of many different stakeholders. So we're really going to have to work together to help the finance sector transition. And I felt it was a little bit the same around Paris, when the Paris Agreement was got along the line, over the line. It was the coming together of business and finance and civil society and regulators that did that. We need a similar effort with this roadmap. So that's my sort of high level thoughts. Barry, do you want me to sort of go into what I think might be the most?
Yeah, what's your assessment of the kind of the big opportunities here?
Right. Well, I think the big opportunity here is that we've got enough case studies and enough examples from overseas to really be able to give confidence around that changing mindsets. You can't change a mindset in a vacuum. So yes, we've got the focus around fiduciary duties, but that's not a sort of all-encompassing fiduciary duty at the moment. It is quite focused on risk. So you really need that stronger leadership. And what I'm very excited about is actually the focus on transforming the financial system itself. So yes, we do have some impact investments, some really good solutions to invest in, but I think for me, the thing that will drive the change most will be around that market mechanisms, fiscal incentives, really understanding the true cost of what you're investing in, what you're lending to, what companies are doing, because it's much easier for fish to swim downstream than upstream. So you've seen that with renewable energy infrastructure. Now it stands on its own as a really good sector and solution to invest in. You really don't need a lot of help or incentives to do that anymore. But you compare that to something like climate adaptation, where it's very much more difficult for investors to understand how they can make the returns they need to meet their duties also to their beneficiaries, as well as helping the wider community. So those are the two areas that I really would like to be taken up and focused on.
And Anne-Marie, for our listeners, can you just unpack a little bit the concept of fiduciary duty? So what is meant by that, and how does it make a difference? Just because some people won't be very familiar with the concept as applied to investment.
Well, I suppose what you could say, it's about governance, but it's also about your professional responsibilities to your beneficiaries. So often that is, over the history of investments, often been about solely financial return, solely investment return. And over time, a much more holistic understanding of what you should be delivering to your the money that you're investing on behalf of people or who will benefit from it. So you say your pensioners, that has now evolved to be a little more holistic. But what was interesting about the legal duty, and I think Justine will cover this a bit more, is that things have shifted on from that. Overseas in many markets, it's still seen as purely about maximizing returns. So right. I'll leave that to Justine, that one, I think.
Cool. Justine, do you want to pick up the story from there?
Yeah, thanks, Barry. I think Anne-Marie did a fantastic job of sort of setting out the framing of that issue there, that sort of shift from a sole focus on materiality of impact to financial risk and return to a sort of broader interest or concern about how we're actually impacting the environment, impacting society, not just in recognition that it has a bearing on risk and return, but also valuing social and environmental outcomes in their own right. So I think that is a really important shift that we've tried to infuse throughout the whole of the SFF report and roadmap. So yeah, I think I can happy to talk a little bit about recommendation 1 in the roadmap, and that is, as Anne-Marie talked a little bit about, that's about seeking to explicitly require financial system actors to consider, manage, and account for their sustainability related risk and also their sustainability related impact, recognizing those two are interrelated, but they're also separate. And so it's, and also the second part of that recommendation was around addressing broader barriers to business and investors who want to pursue a purpose-based model, or putting impact at the heart of their business and investment strategy. And I think I'd probably just start by sort of recognizing that, if we're seeking to rely solely on legal duties to drive the transformation that we need, then we're not going to get very far fast enough. And I completely acknowledge that. And we don't want it to be sort of reduced to a sort of minimum compliance thing with a heightened greenwashing risk. But I think it's probably fair to say, and certainly it seems to be evidenced by the collective output of the SFF process, that we're already undergoing a sort of a societal shift in values. And I think Daniel Calderemus in the launch event yesterday made a really good point about the law, or effective law, effectively follows on from and recognizes common societal values. And in some respects, the law is you could argue the law is catching up in terms of the materiality of, say, climate change to risk. I think it's fair to say that we're already in the middle of a huge values shift in terms of valuing and social and environmental impacts and outcomes in their own right, and arguably of a sufficient sort of critical mass to actually almost say, the law it's timely for the law to look at this, for regulators to look at this, for the law to, if not catch up, but make sure that it doesn't seriously lag behind, it actually sees, what's on the horizon, where we're going. In terms of just unpacking the actual recommendations a little bit, as I said, I suppose two things to highlight. This is about making it mandatory for companies, investors, banks, insurers to consider, financial advisors to consider not only risk but also impact, and also to explicitly require that in legislation over time, recognizing that could take some time to actually get to that point. In terms of the legal risk side of things, listeners might be aware that there was a seminal sort of legal opinion by Chapman Tripp last year, which sort of put beyond doubt, at least in the context of climate change, that risk is material, and companies and other financial system actors should be considering that. And I think that provides a basis to, a good basis to actually broaden that out to broader ESG factors. I think the aim is that we sort of look to codify that in regulation, but in the interim, at least to put that beyond doubt with regulator guidance. And in terms of the impact side of the story, that's newer. And the question there is around how far can for-profit investors, if you like, how far can they pursue impact within their current legal duties? Can they make that part of their sort of primary filter for investment decision making? And I think, others really welcome other people's thoughts on this, but it seems to me it's currently unclear whether the existing legal law requires or even allows, how much it allows or even potentially requires that sustainability impact as a standalone factor be considered by investors. And so part of this regulation in the SFF roadmap is to sort of invite stakeholders, invite regulators to actually embrace that question. What do we think the law should be? And at the very least, we should look to remove any impediments to allowing investors, other financial system actors to actually put impact at the heart of their strategy and their decision making. And it may be worth just mentioning here, there's a very interesting project at there's a lot of different types of work going on in the international arena on this, but one that's perhaps leading the way is the UN PRI has a whole project around a legal framework for impact, and they're looking at these very questions with 11 case study countries, and they're asking the question, even should we look to have standalone positive legal duties around impact, and that may be considered to be, too big a step right now. But I think the interesting piece is around at least making sure we don't have barriers in there for these sort of mainstreaming this kind of impact or purpose-based business and investment models.
Yeah. So I think if people aren't so familiar with some of these terms, I guess the kind of really important thing that you're pointing out, Justine, is that what's happening is that it's gone beyond saying that trustees or directors are allowed to take social and environmental issues into account, to them being obliged to, and the fact that they may be held legally liable if they don't. And I think that's a kind of a big change in this, and I think the Sustainable Finance Forum roadmap is playing a role in that. So is that do you see further work being required on that, for example, to change the law to make it absolutely clear under legislation that that's required? Because that is suggested in the roadmap, but not actually as a specific action.
Yeah, well, it's you could argue it's not necessarily required in the sense that it's become sort of part of the fabric now of this. It's been put, it's been made very clear in that Chapman-Tripp opinion around climate change, for example. There are similar legal opinions around the world reaching the same conclusion, and some of those are actually, broader than climate change. There's a lot of work that's been done by the PRI on interpreting fiduciary duty in different jurisdictions. Again, sort of reaching. I think that it's become part of the sort of common interpretation now about the scope of fiduciary duty and what that already requires. I think at the very least having clear guidance from regulators. There is a view. Some research done by MFE, from what I understand, looked at concluded that actually New Zealand is a bit of a laggard in not actually making this explicit in regulation. So I think you'll still see that change. There were obviously big ripples through boardrooms last year with that Chapman-Tripp legal opinion. I think it's sort of having its desired effect, but it would be that sort of belt and braces to codify it, if you like. But perhaps even look beyond just that narrow question of climate change and risk, and look at broader ESG risk, and look at that whole impact piece, I think.
Okay, thank you. Sorry, let's bring in Ivan, because I think, Ivan, you've got sort of some favourite recommendations that deal with different parts of the roadmap. Do you want to tell us what your favourite recommendations are?
So perhaps unsurprisingly, as an academic, so capability sort of sprung to mind. So here the report is really quite detailed. So capability is building education and the strength to be able to analyze these issues. So to sort of link it into what Justine was talking about, we can mandate it that they look at impact, but I think before you're in that sort of situation, they need the data, and they need the people to be able to analyze that data. And it's not really a straightforward task in the ESG space generally, but in particular in the climate change, it's particularly challenging. So if we think about who needs to improve their level of understanding around these issues, the report talks about professional qualifications and licenses being dependent on having an adequate level of knowledge of ESG risks and climate risks and sustainability risks. Then there's obviously issues around corporate training and directors, the training of directors, but it also goes beyond that. So if we think about tertiary education, so we need to make sure that our graduates, in particular our finance graduates, are aware of these issues, and you know, academia has been slow to pick up on these, in particular finance academia, as you know, well know, and we've talked about before. And then the final piece, but critical piece, is consumer education. So yeah, capability is about education, but also, I mean, the government announced just pre-election that in a few years down the line, New Zealand large institutions of at least 1 billion would have to report to this thing called TCFD. So, you know, for the audience, this is around climate-related disclosures. And, you know, you look at what are your climate risks. So what are the physical risks to your assets? What are the transitions? So as we move from a fossil fuel economy to a renewable. So, you know, institutions need to build up the teams to be able to figure out what these risks are. And that involves creating new teams, new interdisciplinary teams with a whole range of skill sets, from, you know, big data to you know, understanding climatology and geology when we think about how, for instance, sea level rise might impact property portfolios.
Mm. And there's a question that's coming in the chat about, which is very relevant to what you just said, which is kind of how will investment managers demonstrate that they're taking climate adaptation into account? You know, they have a responsibility, presumably, to be looking at the ways that climate change is going to affect businesses and their portfolios. So do you think that the financial disclosure is the only way to do that, or are there other ways that investment managers are going to have to do that?
I mean, I would say the TCFD framework is pretty comprehensive, and as I mentioned, there's that taxonomy of physical transition risk. So if we're talking about adaptation, then you know, we're probably talking about physical risk. And I mean, you know, whenever you create sort of compliance rules, there's a danger that firms just want to comply with the compliance rules. And I think again, if you read the report, there's a spirit to it saying, look, firms, don't treat it as a compliance exercise. Treat it as an opportunity to be able to make better business decisions. And I've seen a shift. We've done some work with academics at UC Davis and Spain, and I've seen a shift in the investor appetite from this in this area, from, you know, let's, you know, tell us what the risks are, to looking at more material things like how is this going to affect your business in the long term. So there's definitely been this shift, and yeah, as I said, the report does provide that emphasis that firms shouldn't treat this as a compliance exercise that they want to tick off, but really it should help them, should make firms, investment firms and investment managers able to make better investment decisions.
Sure. Thank you. Anne-Marie, you were about to say something.
Yeah, I would agree, but you know, disclosure's coming through in quite a siloed way. We've got the modern slavery disclosure now that companies need to abide by. Companies have disclosed data over the years. We've got a lot of suppliers out there that provide ESG data at the moment. But it can be difficult sometimes to properly price that. And I think climate change is what's driven this the most. So we produced our TCFD report this year at the New Zealand Super Fund. We did some emissions footprinting, and this is really useful for our own strategy and managing it, whereas disclosure is almost secondary. Now, the New Zealand Corporate Governance Code already, and whether you're looking at the NZX code or the New Zealand Corporate Governance Forum guidelines, already has a guideline which says integrate ESG into your strategy, and later, and into your risk management. And later it goes, disclose your ESG data and engage with your stakeholders. Now, that's the way things should be done. The boards and the management of companies should be identifying these key issues that impact their businesses positively and negatively and put them into their strategies. And that's why in the UK, the strategic report, I have to say, has grown a lot, but the strategic reporting requirements for companies over there embrace that kind of, this is part of your strategy.
Mm-hmm.
So it is already there in a way. However, I think we really need to make this distinction between what we've got now and what outcomes, the whole area of outcomes reporting is looking at, or under fiduciary responsibility. What we have now here and overseas is the increasing integration into fiduciary duty of looking at risks to the investment, right? So the Sustainable Finance Forum has always had this strap line around looking at the impact on the investment, but also looking at the impact of the investment on people and the planet. And those sorts of things, they're going to take a few years or many years to develop. So you really need to get those nailed, I think, before it may come into fiduciary responsibility in a way, but people don't really understand what you're asking for when you're saying outcomes.
Yeah, and it was very interesting to me that this Sustainable Finance Forum process started with people talking about this concept of managing risk, of the ESG, the environment, social and governance analysis, as being the key mechanism to manage risk. And Justine, I think you were one of the people who said at a very early stage, well, it's not just about managing financial risk here. Actually, we have to manage the impact on the planet. We have to manage the impact on people. And I think this has been a really useful process in the Sustainable Finance Forum to put exactly what you're saying, Anne-Marie, into the document, into the roadmap, to talk more about managing the impact and making sure that the harmful impacts are basically mitigated, and that we should be aiming for the positive impacts. So I think that, I think we'll look back and see this as being quite an important switch in the thinking around sustainability amongst the finance sector. Do you agree with that, Justine? Because you were fairly central in it.
Thanks, Barry. Yeah, I absolutely agree with that, and I think it's going to be quite challenging trying to bring those two, although as we've said, they're very interrelated. They're sort of still running as slightly separate tracks, and for the investment community to figure out how to bring those two together. On the one hand, you've got like a TCFD style framework, which is being probably going to be adapted for other sorts of issues, biodiversity, potentially inequality, for example. That's through a risk lens, and investors are being asked to sort of take that approach to inform strategy and to inform disclosure. And on the other hand, they're being asked to, there are other reporting and requirements and strategy considerations, measurement, valuation considerations that come through an impact lens, and how you bring those two together, traditional ESG due diligence with future impact due diligence, outcomes measurement and valuation is I think going to be an important challenging piece to try to bring together, but critically important.
Yeah. There's this kind of 11 major areas of recommendations. They're not really kind of recommendations, 11 areas of recommendations, a whole lot of recommendations underneath that. One of the ones that I thought I'd highlight was the fact that inclusiveness of finance got into the agenda, and I think it took a while to get in there, but the argument is that finance can't be sustainable unless it's also inclusive, unless finance system works for the benefit of everyone. And I think that's one of the key issues for me in recognizing this, that a solely for-profit market-oriented financial system doesn't necessarily take care of the people who don't have much money and who have high levels of vulnerability. So I really welcome the recommendations in there that are very much trying to facilitate financial services and the kind of meeting of financial needs for people who can't always afford to pay as much as those who are wealthy. Ivan, was there anything else in the agenda that struck you as important?
So I think leadership, there was actually government, and in particular government leadership sort of came up around the document in several places. So clearly that is a really important issue, and especially the social issues, as you've just mentioned in the context of the COVID crisis. Then, you know, government may need to think about how, for instance, you know, you'll find an increasing number of people losing access to high quality financial services. So how they can act to mitigate those negative effects. I think one of the discussions in a summit after the presentation of the report, I think something that highlights there is a sort of tension between monetary and fiscal policy. So, you know, we have historically low interest rates, which seem to be fueling a housing boom. And, you know, we've got a lot of people who are suffering an awful lot on income. And so I think that's an example where the social issues, you know, arise in the financial system. Yeah, so those that already have wealth are potentially doing quite well, whereas those that have low wealth are suffering and may even be losing their incomes.
Yeah, cool. Can we turn to, so what's next? And there is now a process going forward that's been talked about at the launch yesterday. We've got 2 new co-chairs appointed, Ross Pennington and Bridget Coates, who's on the call. So very warm welcome, Bridget. So there's a lot yet to be done though, because the report is as described by one of the current co-chairs as the start of the beginning, the end of the beginning.
End of the beginning.
End of the beginning.
No, don't say it's the start of the beginning.
Although I think the start of the beginning might be a better one. So anyway, there's a long way to go, and you know, great thanks to Ross and Bridget for picking up the baton on this, and I'm sure we're all kind of very prepared to help out in whatever way we can. But Anne-Marie, how does it look from your perspective? Maybe also a little bit from the super funds perspective. How do you see this agenda actually rolling out and being, you know, going from being this rather complex document into actually being a series of changes that are going to start to really make a difference?
Well, I think the summary of the summary report has helpfully sort of laid it out in certain waves, certain key actions and enablers to try and make it a little bit more digestible, but not taking away, I suppose, a lot of the essential steps that need to be done. And I think that being mindful about what you can do next will be really important. I think engaging with the government will be very important. But also, I think with this is to continue to build out the evidence base, to build out examples, to leapfrog things that have happened overseas. Like if we want a taxonomy, does it have to be quite so detailed for a New Zealand system? After all, we don't have so many subsectors. We could probably identify those sectors we think would be very positive for investment, lending, for people, for the planet, and those that might not be so much. So I think building out that evidence base, which really helps encourage other players in the financial sector, encourage the government to be brave enough to prioritize this as part of what they are focusing on, and really help change those mindsets would be really one of the most helpful things that we could do. Also, just extending that fiduciary duty beyond, to a wider range of trustees, even though it's focused on risk. And then finally, I would say that I've always looked at impact as risk. You can't always price it, but if something is severely negative around the company or sector, then that eventually is going to be a risk to the company. So, and in many ways, the externalities do come home to roost, but it's actually building out how they do that without getting too tied up in the first few years and getting the perfect way to measure outcomes when you're throwing in labor, employment, economic impact, social impact, and environmental impact. I think you could just get lost, you won't see the wood for the trees. So anyway, Bridget's going to, I'm sure, put in mind to how to corral all of these different things into something that's quite impactful and, prioritized, I would say.
Justine, what are your thoughts about the way ahead?
Look, I really agree with what Anne-Marie is just saying about, there's a lot of work to be done, and there's a lot, more that we could, with better data, with better methodologies, with, standardization. I mean, all these things will go a long way to, go bigger, go faster. But I would hate, I'd hate to see that delay people just getting started. I sort of sometimes worry about, paralysis by analysis, and at a sort of high level, we may already be sufficiently equipped to, at least in a qualitative sort of high level sense, make a judgment upon, is this the sort of thing we want to be investing in or not, just at that very sort of first gate of, the eligible universe of investments, for example. And Anne-Marie will be a better place than me to sort of talk about the feasibility of that. But I just at that principles level, I don't know that we do need perfect data to make good decisions at this point. And also, I think in terms of the impact, sort of the measurement piece is important to distinguish between the impact in terms of the downside risk perspective, but also impact in terms of things with a positive impact. And there's a whole sort of data set around, or there's a methodology and measurement sort of piece and data piece around defining outcomes, measuring outcomes, so that's kind of another whole piece in itself. But, I think in terms of taking the whole roadmap forward, good luck to you, Bridget. It's going to be it's going to be very challenging, but I'm really confident that this whole community that's built up around the SFF process is standing by to support the new co-chairs. And that, just really quickly, I think ongoing not only ongoing industry leadership or ongoing broader stakeholder participation, passion, ownership and accountability around it is going to be really important. Bringing in the government, not just as an observer, but as a formal partner to the process, I think will be important. And we need to see a government work program around this, a coordinated government program around this, and ideally led by the members, the Council of Financial Regulators, not by MFE. MFE has done a fantastic job to keep driving this forward, and a bit of a leadership vacuum, I think you could say, with parts of government in some respects. But that needs to change. And just finally, the centre, this proposal around the Centre for Sustainable Finance, or whatever it will end up being named, that I think it is important to have that enduring architecture around that, for it to be independent, for it to have public-private participation, for it to be sufficiently funded and resourced to really be able to do the job that needs to be done to take this roadmap to reality.
Yeah, I think that sense of independence has in a way marked the Sustainable Finance Forum, although it's been very much a kind of a finance sector-led process. It's involved a lot of people from outside of the finance sector, either sort of consultants like KPMG and EY and others who have been deeply involved, or academics like you, Ivan, and others, or non-governmental organizations like Mindful Money. And I think in a way that's given a sense of a little bit of independence, but also pushing the agenda along a bit, maybe a little bit more than would have originally been considered. So Ivan, with that in mind, what do you think the prospects are for the future, and maybe particularly potential links with academia?
Yeah, so I'd sort of echo the sentiment that it feels like the end of the beginning. I mean, if we look at how this issue has been taken on hold in New Zealand over the last 2 or 3 years, it's actually quite remarkable. I mean, we've had leaders in this area for a long time, like NZ Super, but there were a lot of firms that didn't consider this. So I think the report probably marks a moment where the majority now realize that something has to be done. And I think the question now turns to how we do something about it. And so, this raises a lot of issues around, for instance, capability and data. And I hear Anne-Marie's point about impact and outcomes. And some firms have much stronger capabilities and will be able to do that. Other firms are just at the very beginning of this process of building the skill sets, the teams that can help to answer even the more basic questions of what their risks might be in this area. But it really does feel momentous. It does really feel like the vast majority of finance has now coalesced around the idea that something has to be done, and now we're moving towards what can be done, and I think universities will play a big role in terms of research, but also in terms of training the next generation of finance professionals.
Absolutely crucial. Yeah. So rather than just talking about the co-chairs and Bridget Coates, Bridget's indicated that she wouldn't mind saying a few words at the end. Well, no, I think she's, there she is. Hello. Welcome, Bridget. And thanks very much for joining us, and in particular, thanks for taking on this kind of demanding role and big responsibility, but you have full support.
Thank you so much, and for the supportive comments, and also for the very helpful ideas for next steps. So no doubt it's a challenge, but actually, in a sense, there's so much momentum. I think you were just saying, Ivan, it's very true. There is in some senses, it's pushing on an open door, and everybody on this call has a role to play, and really grateful for any thoughts and any ideas that you might have. So just really welcome the momentum, welcome the interest, and look forward to working with many of you. Thanks, Faz.
Great, thank you very much, and thank you very much to Anne-Marie for joining us, and to your boss, Matt Winneray, for being one of the co-chairs and making jokes at his brother's expense during the launch. The running sort of battle between those two is always it's the
best brother.
Sorry?
It's so fun. He's the best brother.
Yeah. Great to see us sort of running soap opera, and I think Matt certainly won the last round. Thank you for joining us, Justine, and for all your work on the project over time.
Thanks, Barry.
And thank you, Ivan. It's great that you're kind of making ground in academia on this stuff. As you said, it's really vitally important.
Thank you.
So to all of you, we've got, as I said, a really interesting a meeting next week. It's on modern slavery, and one of the reasons to talk about modern slavery on this series is because the investment community has been really an important player in tackling modern slavery in the past, and we're going to be talking about some of the problems, the modern slavery problems in New Zealand that have been exposed in the fisheries sector through essentially bonded labour on foreign fishing boats, on migrant labor being tied to employers and forced to work in terrible conditions and below minimum wage, and other abuses of labor rights internationally. So that's going to be on next week at 7 p.m. Do come back and have a look at it. This is one of the last of our seminars. We started these on a pivot during the first lockdown when we couldn't have any face-to-face meetings. We decided to start some weekly seminars, and I think we're up to number 30. So please do check out our website, because we have some fantastic seminars on there, of course, including this one. But please check out the full series. We got some very generous sponsorship to help us put this series on. So thanks very much to Boost Asset Management, to Generate Investment Management, Harbour Asset Management, and to the research firm Sustainalytics. Thanks to all those sponsors for their support. That's all from us, and see you next week. And ka kite ana. Thank you.